Buy Europe seems to be the consensus trade that's emerging over the last month or so. The politics just scream, stay away, stay away. What do you say?
Well, I think you've pointed out exactly right. I mean, the politics are something that people are always watching, and to the extent that markets climb a wall of worry, that's one of those things that people worry about coming. England leaving the European Union, having the elections in France with Le Pen potentially being the new head of France. Those types of issues are always on investors' minds, and that's possibly why people have stayed away. But absolutely, valuation is what it's all about. You look at the Euro stocks. Valuation for earnings this year is maybe it's about 15.8 times earnings. You look at the U.S., it's around 18.3 times earnings for the S&P 500. So on a valuation basis alone, Europe definitely looks attractive. You also look at how dollar strength seems to be fading, at least in the short run. And as U.S. investors, Europe does look very attractive right now.
Okay, fair. And we saw iShares MSCI Eurozone ETF gathered like $518 million. So yes, there is some money being put into that bet. But is there a distinction between actually seeing a lot of flows and just seeing a stop of the outflows that we've seen in the last few years? And where are we in that?
I think it's probably early stages. You're absolutely right. You can look at the flows and kind of see what's happening, whether you look at various ETFs or you look at the actual flows through funds and other ways to measure it. But ultimately, it's one of those things where investors are kind of looking at what's available to them, what's the best options, what makes more sense. And so I think we're still in the early stages as more and more money will move to Europe, potentially leaving the United States and looking elsewhere for just better valuation opportunities.
So, Chris, Europe is a pretty big place. Still 27 countries after the UK leaves, right? Take us into the divergence here. Are there parts of Europe that are more attractive, either by sector or by geography?
Sure. I mean, I think people have talked a lot about the financials. They've had a hard time, leading up into this year, and you're starting to see some recovery there. So I think from a sector basis, people are going to look to play the financials, look to play, parts of the overall economy recovering, so that could be on the consumer discretionary side. But looking at countries, it really varies. Obviously Germany is considered one of the stronger economies in Europe, and rightly so. But from a valuation basis, maybe you're better off looking at some of the more peripheral nations, looking at Spain, looking at Greece, looking at, again, taking on some more risk. If it's true that the recovery will take hold, then you want to also look at kind of what's your best risk reward and possibly look for some upside as the economy continues to heal.
And I just want to highlight, Chris, what you're talking about. If you take a look at the Bloomberg here, it's the blue line's Euro stock, but the white line are cyclicals versus defensives. And this is the start of the rotation that we saw back in July and August. And that grind higher as cyclicals wind up taking over. There are some calls out there that the cyclicals, in particular the DAX, is actually overvalued and that defensives are going to start leading the way. Do you buy into that kind of theory?
I mean, again, I think some of the reasons why they're expensive is because of the good fundamentals. For me, I think it's really going to be a case-by-case basis. I think you're gonna have to pick your spots. But I do think it does make sense that cyclicals will continue to improve as the economy gets better. So, regardless of what you look at as financials, that's typically considered a defensive sector. That might be an example of where you would pick the financial sector along with some of the cyclicals. But utilities and consumer staples, maybe you'd stay away from those and go more towards consumer discretionary, technology, and again looking at those cyclical sectors.